Hey, hello everybody, Alex here. Welcome to my Finance and Accounting Education channel. Today we have the second tech giant, the results of the Q1 2022. I have already presented Alphabet or Google. I said that I'm going to, because the results of the tech giants came, all five of them. So we are talking about Meta, Amazon, Alphabet, Microsoft and Apple. And I said that I'm going to start with the ones that presented the worst results. We've seen that the Alphabet results were actually not that bad, and what's there to be seen actually and what's important in their P&L for Q1. And then by Amazon, let's just say that the situation is similar. The results are totally not that bad. I mean, it doesn't have anything to do with the core business, let's say. But of course there are some discussions about the core business as well, that they are facing inflationary pressure, then the way they are using their fixed capacity. So they just explained that during the first stages of the Omicron wave, the employees went in home leave or in sick leave and so on and so forth. They hired some others, and now they have a little bit of a staff problem, but also with the warehouses that they have somehow invested. They made some decisions in the past which cannot be really reversed like overnight, and that they have now a little bit of excess capacity, but they think that this is only short term and it will be fully used in almost no time. Also, if you are thinking about the COVID pandemic, Amazon had a very interesting development because it's in the e-commerce, and of course it benefited a lot from the pandemic, and now the things are starting to settle down. But before we jump into the presentation in detail, I'm going to ask you to subscribe to my channel, to hit the bell notification button, and you will never miss an update on my site. I do them quite regularly these days. On Tuesdays, Thursdays and Sundays you should expect new and hopefully interesting videos from me. And just remember that subscribing to my channel doesn't cost you a thing. Also, watching my videos doesn't cost you a thing, and it will be very much appreciated. That being out of the way, so we have first, let's just say, a short article from CNBC, which has something to do with this. They reported the total loss. Amazon reported a total loss of 3.8 billion, which was kind of surprising because we are used of not having any profits because of their aggressive investment policy, but we are not used of having losses. And the question is, Amazon's net loss prompts query: has it built too many warehouses? It just is, as I was telling you, in recent years Amazon has spent billions of dollars on new warehouses that cut into profits, explaining to investors that it had no choice but to meet ever-rising consumer demand. It turns out Amazon may have built too much too soon, analysts say. The world's largest online retailer on Thursday reported $2 billion in incremental costs from having excess fulfillment and transportation capacity, a dramatic shift from just 2 years ago, when Amazon had to turn away merchants' goods because it had room only for vital supplies. The company is lowering its capital expenditure plans for 2022, its chief financial officer Brian Olsavsky said. Amazon will spend less on fulfillment projects this year than last, while transportation investments will be flat to slightly down. The new reality began to emerge halfway through 2021. Amazon was on track to double its warehouses and delivery network, a feat necessitated by consumers' embrace of at-home shopping and to avoid COVID-19 infections in stores. For the first time, space was not the retailer's main constraint. It was labor to staff facilities fully. At Amazon scale, that meant hiring 27,000 workers in 6 months. After the Christmas holiday, consumer demand dwindled, as always. Online sales dipped from a year ago. Amazon's results show brick-and-mortar stores beckoned shoppers once the Omicron wave subsided, and still others faked the choice between buying goods and filling their cars with high-priced gas. Amazon says the order patterns have remained the same. Nevertheless, Olsavsky told reporters the company appeared to be overbuilt for current demand. He said Amazon had no regrets, later telling analysts many of the build decisions were made 18 to 24 months ago, so you see more than 1.5 to 2 years ago. So there are limitations on what we can adjust mid-year. David Glilka, former Amazon vice president, who is now chief technology officer at the on-demand fulfillment company Flexe, said extra space was not my major challenge. Just as I have said, they will need it in no time. Amazon may have gotten a little ahead of fulfillment capacity, but they will grow into that excess capacity over the next year, he said. A new program for Amazon to store and ship goods that independent merchants directly sell to consumers, known as Buy with Prime, may help too. Amazon will eventually need these warehouses, agreed Michael Pachter, an analyst at Wedbush Services. But Amazon's disclosure provided little solace. Didn't they see this coming when they built all these fulfillment centers? Pachter asked, noting how Amazon doubled over 2 decades of capacity in just 24 months. Why not do it in 48? Operating income fell 59% to 3.7 billion in the first quarter, while decline in Amazon's share in electric vehicle maker Rivian resulted in the company's first net loss since 2015. We've seen that for Alphabet, the most important P&L item which drove the results were actually the marketable securities. I'm just going to spoil the fun and the distraction for you and tell you that the troubles that lead to the 3.8 billion loss in Amazon are actually caused by Rivian. So it's not really a core business problem. But let's just go to the press release. So we have operating cash flow decreased 41% to 39.3 billion for the trailing 12 months, compared with 67.2 billion for the trailing 12 months ended March 31, 2021. Free cash flow decreased to an outflow of 18.6 billion for the trailing 12 months, compared with an inflow of 26.4 billion for the trailing 12 months ended March 31st of 2021. Free cash flow less principal repayments of finance leases and financial obligations decreased to an outflow of 29.3 billion for the trailing 12 months, compared with an inflow of 14.9 billion for the same trailing 12 months. Free cash flow less equipment, finance leases and principal repayment of all other finance leases and financing obligations decreased to an outflow of 22.3 billion for the trailing 12 months, compared with an inflow of 16.8 billion. Common shares outstanding plus shares underlying stock based awards totaled 523 million, compared with 519 million 1 year ago. Net sales increased 7% to 116.4 billion in the first quarter, compared with 108 billion in the first quarter of 2021. Excluding the 1.8 billion unfavorable impact from year-over-year changes in foreign exchange rates, through the quarter net sales increased 9% compared with the first quarter of 2021. So you see they had also a net sales increase. Operating income decreased to 3.7 billion in the first quarter, compared with 8.9 billion in the first quarter of 2021. So you see, unlike Alphabet, they are actually having some troubles also in the operating income. But however, the net loss was 3.8 billion in the first quarter, or $7.56 per diluted share, compared with the net income of 8.1 billion or 15.79 per diluted share in the first quarter of 2021. First quarter 2022 net loss includes a pre-tax valuation loss of 7.6 billion. So if you are thinking 3.8 compared with 7.6, so actually the business, without taking this into consideration, the business would have been profitable in the quarter, including non-operating expenses from our common stock investment in Rivian Automotive Inc. They have also mentioned that it should be okay with the investors, because if you remember, they posted a 12 billion gain on Rivian in the previous quarter or something like that, and yeah, actually it's the market volatility. And of course, they just as I have said, they are talking about inflation. They have put a fee to the merchants, which was something new. They have announced that they are going to increase the prices of the Prime subscriptions. Yeah, they are just trying to also to cope with inflation. Yeah. And let's just go to the numbers a little bit. Just as I have told you the previous versions, if you see this blue, the previous presentations of results from various companies, if you see this blue format, you will know that these are official numbers. It's the format in which the companies are submitting to the Securities and Exchange Commission. So you have the net product sales 57.4 billion to 56 billion, and net service sales 51 to almost 60 billion. Actually, here you will have the Amazon Web Services and the advertising business. Total net sales from 108 billion to 116. Then you have operating expenses, cost of sales 62 to 66 billion, fulfillment 17 billion to 20 billion, technology and content 12.4 to 14.8, sales and marketing 6.2 to 8.3, general administrative from 1.9 almost 2 billion to 2.6 billion, and others from 30 to 249. Total operating expenses growing from 99 billion to 112 billion, which is actually the reason why the operating income is dropping from 8.8 billion to only 3.7 billion. If you are looking here where are the major growths, you will see that you have 4 billion here in the cost of sales. You also have 3.5 billion in the fulfillment. So it's let's just say that it's the inflation and the cost with the employees and so on and so forth. So there is not that much to be done here. They need to somehow pass this to the consumers, and I think they are doing it, and probably they will do it in the next periods as well. Then after the operating income, which I just told you that is reducing from 8.9 billion to 3.7 billion, you have interest income not very significant, interest expense also not very significant, and then you have other income expenses net from 1.7 billion positive to minus 8 billion. Here is the 7 billion Rivian story, which is leading the company from 1.4 billion okay, so this is the total on non-operating, but is leading the company from 10.2 billion income or loss before taxes to a minus 5 billion income before losses and taxes, and they have a provision to add from the previous periods, and so you come to the net income loss instead of 8.1 billion what they had in 2021 to minus 3.8 billion what they had in 2022. Then if you are going to, maybe we can check some details on the other income. That's it. There is no other occurrence of the terms. So we have net income loss of from 8 billion to minus 3.8 billion, so to loss of 3.8 billion. Other comprehensive income loss. But they don't have any breakdown of what actually happened with the Rivian, or what other items are there, but we can anyway look at the segment information. We have net sales in America growing from 6.4 to 6.9 billion, operating expenses from 60 to 70, turning into an operating income per segment from positive 3.4 billion to minus 1.5 billion. International net sales went down actually from 30 to 28. Operating expenses from 29.39 to 30. Operating income loss down from 1.2 billions to minus 1.2 billions. Amazon Web Services net sales exploded from 13.5 billion to 18.4 billion. Operating expenses up from 9.3 to 11.9. Operating income in the Amazon Web Services growing from 4 billion to 6.5. So actually this is their best doing business. And consolidated, you have the entire 108 billion in net sales to 116, and the net income from 8.1 to minus 3.84. Then you can see the percentages of, or the developments in North America after growth in the previous years of 40%. So 2021 against 2020, you had only an 8% growth in 2022, which is only natural because the pandemic is over. International, they are actually declining in this quarter with -6%. Amazon Web Services growing 37% compared with 32% last year, and consolidated you have, instead of 44% last year, only a 7% growth. And the sales mix, 59% in North America, international declining from 20 to 25, web services growing from 13 to 16. Yeah, which seems that on the international level they are not doing that well. Then you have the balance sheet. I'm not going to insist on the balance sheet or on the cash flow statements that much. Yeah, so the question is how they will manage to pass on all this. They estimated let's say the negative impact of having overcapacity at 4 billion, and they said that it will be reduced down to 2 billion in the next quarter. The game plan remains the gameplay for them remains how to forward the costs with the inflation, to continue to have growth on the top level as well, because somehow those objectives are contradicting themselves. They know that in order to grow they need to keep low prices and to offer a very diversified portfolio, and we are talking now about the e-commerce, so not about web services. That they need to continue to provide a very diversified and very good range of products, but at very low prices, and the inflationary pressures are moving the prices in the other direction. So yeah, let's just see how this plays out. The stock took, of course, a beating after these results as well, quite a lot actually, but I think it's only temporary, and it's not something that bad. The market seems to, and especially in the United States, the markets are overreacting to all these quarter results. We will see later when we talk about Facebook. After very bad results the previous quarter and the beating, this quarter they had very good results, and the stock bounced back, maybe not as much as it felt after the previous quarter, but for this quarter it bounced back up. So from my point of view, this approach of overreacting for each and every quarter results, the companies are sometimes doing better, sometimes they are doing worse. I mean, the important is the long-term picture, and if you really believe that the company is going to do well in the future, and if it has a place in the market, and it will continue to develop on an average on a long-term run. That would be it about Amazon for today. I hope you enjoyed the presentation. If you liked it, hit the like button, share it with somebody that might be interested about the topics or the Q1 2022 results of Amazon. Comment in the comment section if you have something to add to the topic. But most importantly, please do not forget to subscribe to my channel. It doesn't cost you anything and it will help me a lot. If you hit the bell notification button, you will also never miss an update on my site. I do them quite regularly these days, on Tuesdays, Thursdays and Sundays as well. You should expect new and hopefully interesting videos from me. Below this video you have links. You can create an eToro account and trade there without a commission or a fee. You will trade shares if you are trading with your own money, or trade CFDs if you are trading leverage. But no matter what kind of strategy you choose and how often you are trading, not paying a commission or a fee is always a saving, which can be larger or smaller depending on your behavior. Also below that link you have an Amazon wish list with hardware and software items which can help me improve the quality of my videos, thus being also beneficial for you because you'll get better videos from my side. But let's just be honest and say that from financial perspective, the Amazon wishlist is the most inconvenient for you. The easiest way through which you can support me, and it doesn't cost you anything, is to subscribe to my channel, hit the notification button, and of course to continue to watch my videos. Once again, my name is Alex Petrescu. This is my finance and accounting education channel. I thank you today for your time and patience, and I look forward to presenting to you with the next opportunity. Goodbye.